For those of you who are wondering how come I'm just on YouTube all day today, I just did a 2 hour live stream earlier and I'm back out here live streaming again. And it's because it's a beautiful day and I didn't want to be at home, so I drove to town to collect my paycheck and to do a couple of errands. And I thought to myself, well, let's see what's going on with the Federal Reserve speeches and if there's any new speeches out there. And sure enough, there is. And this speech is the dollar's international role. And this looks pretty good. I was just doing a kind of a quick review of it before people started jumping in on the live stream, which we have 3 people who have already joined in. Thank you for joining in. Hit that like button as soon as you get here. All right. And what we're going to do is we are going to at least review some, if not most, of this speech that is coming from Christopher Waller. And like I said, this was kind of a surprise. I wasn't expecting to see that. Well, I mean, I'm not expecting to see any of the speeches, but when I looked, I was like, oh man, what's this one about? And it's the dollar's international role. And so as we dig into this, it looks, at least from the review that I was just kind of perusing through it, it looks like they are talking about how it is that the dollar is going to be performing in the future as that dollar or as the world reserve currency, and how to hold on to that status, or what it means for the Federal Reserve to hold on to that status. So anyway, we're going to start reviewing some of this. We got 24 people already watching. Go ahead and hit that like button as soon as you get in. It'll get the algorithm to pick up the video and start sending it around for more people to join in. But I think you guys are going to like this one because this is a big deal. This is one that a lot of people talk about, especially when it comes to, like, the BRICS nations and the dollar losing that world reserve currency status. I think understanding it from at least somewhat of the Fed's point of view could be quite helpful in determining whether or not it's going to last. Of course, if it was my currency, I would say it was the best one and it's going to last forever too. So, whether or not we can take this with a grain of salt or not, I guess it's up to you and your opinion of them. All right, so here we go. Thank you to the Global Independence Center for the invitation to speak to you today. My subject is the U.S. dollar, primacy in global finance and the global economy, which some feel is under threat as never before. One headline asserts why the dollar's reign is near an end. Actually, it turns out that this threat isn't so new. That headline was from 2011. It is tempting to write off concerns about the dollar status that never seem to come to pass, but I don't dismiss them. The role of the United States in the economy is changing, finance is always changing, and I think it is important for policymakers to regularly consider if and why the dollar's role might change as well. That's what I aim to do in these remarks. When people refer to the dollar and its reserve currency status, they typically mix together a variety of roles that it plays on the world stage. So I would like to start by clarifying these many roles. First, the term dollar, dollar in quotes, often refers to the physical U.S. currency and its use around the world. However, in certain contexts, it is used to describe financial assets, such as U.S. Treasury securities, that are denominated and in a promised redemption in U.S. dollars. Finally, the word dollar is used to describe in its use as the settlement unit of account in international transactions. I will use the word dollar throughout this speech to refer to these various concepts, and I hope it will be clear which one I am referring to as I speak. So that's pretty interesting in just that right there. So, like, if you're new to, like, how the Federal Reserve conducts themselves when it comes to their speak, they will use a certain term, right? And then if you don't know what that term means, then a lot of times it'll be left up to our interpretation of what that means when we hear about it in the context of, like, the speech or maybe something else. But what they refer to it as is something else. Like, when they use this particular term, it has an actual definition to it. And that's why they clarify it there. When I say the dollar, I'm referring to these two aspects of what it is. And hopefully, as they're speaking, as he's speaking, that you'll be able to define what those two differences are. kind of like the average inflation rate over time. If you don't catch the overtime and understand that overtime means average inflation rate and not just like some added words to it just for, grammatical purposes or something like that. It's definitely in there for a reason. It's part of the definitions of it. All right, how many people we got up in here? 65 with only 15 likes. That doesn't seem right. We should have a lot more people up in here. All right, yeah, dishes. I am doing yet another live stream right now, but I don't know how long I'm going to go for. We'll see. Okay. So basically, the government attempts to pay down national debt with country would fail. All right, Kevin's back in here. Good to see you, Kevin. All right, so let's go on here. For many decades, the U.S. dollar has had an outsized role in the global economy, supported by the size and strength of the U.S. economy, its stability and openness to trade and capital, flows, and strong property rights and rule of law. The dollar's international role has clear benefits for the United States, lowering transactions and borrowing costs for U.S. households, businesses, and government, and widening the pool of creditors and investors. The widespread use of the dollar can help insulate the U.S. economy from shocks from abroad. The rest of the world also benefits from the dollar's international role. The dollar serves as a safe, stable, and dependable form of money around the world. It serves as a reliable common denominator for global trade and dependable settlement instruments for cross-border payments. In doing so, it reduces cost of engaging in international transactions for households and businesses, including those outside of the United States. Recent commentary warning of possible decline in the status of the U.S. dollar raises concerns about the effects of sanctions against Russia, the U.S. political dysfunction, the rise of digital assets, and China's efforts to bolster usage of the renminbi. Other commentary has warned of geoeconomic fragmentation and whether trade and financial flows could realign in ways that adversely affect the dollar's outsized role. Against this backdrop, it is useful to review whether there has been any change in how the dollar stacks up against the standard measures by which we assess a currency's acceptance as an international currency. Acceptance as an international currency is typically assessed along three dimensions: its use as a store of value, as a medium of exchange, and as a unit of account. Alarmist headlines notwithstanding, the dollar continues to dominate in all three of these measures, and generally by large margin compared with other currencies. The store value dimension relates to the ability to save in a given currency and retrieve those savings in the future without a significant accepted loss of purchasing power. A key measure of the confidence in a currency as a store of value is its use in official foreign exchange reserves. At almost 60% of the global reserves in 2022, the US dollar is by far the dominant reserve currency. The next leading competitor to the dollar is the euro, with a share of roughly 20%. Although some have pointed to decreasing share of reserves held in dollars, the dollar share though down somewhat from the mid-2000s, is actually little change from the mid-1990s. And while there has been an increase in the share held in renminbi, the share is trivial at about 2%. That to the extent that there has been gradual diversification in reserves since the mid-2000s, it has been in a widening range of other currencies such as Canadian and Australian dollars. So that's pretty interesting to think about within there. Like that one statement alone about it has been little change since the 1990s. Now that's something very much to consider, right? That in the 1990s, the amount of world reserve, or the amount of status that the dollar was holding as a world reserve currency, was less than it had been in the 2000s. Now, a lot of times we just want to compare it to the 2000s, say, hey, look, it's losing that status, it's losing that status. But is it really? I mean, it's the same as it was in the 90s. Really, it had gained a lot of status that it had lost, but it didn't lose any more status than what it had back in the 90s. It just gained and lost some, right? So this is really where a lot of times when you hear about it out there, that the dollar is losing its status, like from when, like from how long ago, right? And now, I mean, it could continue to lose its status, and it very well could. I mean, and be on its way, but it's 60% of the world's currency, right? Of what they're holding in reserves, with the euro being 20%. And then as far as China, they're at 2, right? 2%. Like they could double, triple, quadruple the amount of status or reserve status they are holding, or the renminbi is holding, and it still would not even come remotely close to being half of what even the euro is, right? I mean, I guess it would start getting half, but it wouldn't come even close to the dollar, right? Not even. So is it happening? Sure. Is it happening quickly? Doesn't appear to be, you know? I mean, not to me anyway, it doesn't. All right, so it continues on here. The majority of the global dollar reserves are held in U.S. Treasury securities. This is something else to remember. Like a lot of times when we think about the dollar being held outside of the United States, the majority of global dollar reserves are held in U.S. Treasuries. So U.S. Treasuries are being used like dollars around the world. See, this is another thing that people wonder. It was just like, why in the world would people even want U.S. Treasuries, or people are dumping them? There is a demand for them. The demand is the use of them like they're a dollar, right? Okay, so the majority of global dollar reserves are held in U.S. Treasury securities, with the depth and liquidity of the U.S. Treasury market reinforcing the desirability of the dollar as a store of value. Now, I think that's very interesting to make a statement like that, because what we have been talking about lately on this channel is how the Treasury is gearing up to do a bond buyback program to make sure that the bond market stays liquid. But let me read that again. With the depth and liquidity of the U.S. Treasury market reinforcing the desirability of the dollar as a store of value. See, that's the reason why the Treasury is going to be there. They cannot lose that desirability as the store of value, because even though it's the dollar, the Treasury is looked at very much like it's the dollar itself, right? Okay. Currently, foreign investors hold about 1/3 of Treasury securities outstanding. Let me read that again. Currently, foreign investors hold about 1/3 of the Treasury securities outstanding. There has been a steady decline in this share. Foreign investors held roughly half of Treasury securities outstanding 10 years ago. A major reason for the decline, however, is that over the past decade, the stock of global foreign exchange reserves has grown much more slowly than the stock of Treasury securities outstanding. So foreign official investors are accounting for the declining share. Foreign private investors' demand for U.S. Treasury securities, by contrast, has been sustained and has kept pace with the increased issuance in recent years. The roughly 1/3 of the Treasury securities currently held by all foreign investors is now broadly comparable with shares of sovereign debt held by foreign investors in the euro area, the UK, and Japan. The U.S. benefits from foreign demand of U.S. Treasury securities since it bids up the price of such securities, thereby lowering the interest expenses paid on the Treasury debt. So that's pretty interesting to think about within itself, right? It almost, like, I don't know how many people I've actually heard, like, people actually explain it in that fashion. But I'm gonna read it again so that we get a better, clearer understanding of it, because sometimes you hear it twice and, helps. So let's think about this. The majority of the global dollar reserves are held in U.S. Treasury securities, with the depth of the liquidity of the U.S. Treasury market reinforcing the desirabilities of the dollar as a store of value. Currently, foreign investors hold about 1/3 of Treasury securities outstanding. So all the securities that are out there, all the Treasuries, foreign investors hold about 1/3 of them. There has been a steady decline in this share. Foreign investors held roughly half of the Treasury securities 10 years ago. Right? So this is really where everybody is talking about, like, hey, they're getting out of the Treasuries, they're getting out, right? A major reason for this decline, however, is that over the past decade, the stock of global foreign exchange reserves has grown much more slowly than the stock of Treasury securities outstanding. So foreign official investors are accounting for the declining share. So the Treasury, it sounds like, I don't think they're necessarily growing more slowly than the stock of Treasuries. I think the stock of Treasuries is growing more outstanding. I think that's really what it is. And the foreign investors are accounting for this decline. Foreign private investors' demand for U.S. Treasury securities, by contrast, has been sustained and has kept pace with the increase in issuance in the recent years. The roughly one-third of Treasury securities currently held by foreign investors is now broadly comparable with the shares of sovereign debt held by foreign investors in the Euro area, the UK, and Japan. The U.S. benefits from foreign demand for U.S. Treasury securities since it bids up the price of such securities, thereby lowering the interest expense paid on the U.S. Treasury debt. Another way to look at the dollar as a store of value for the global financial system is the demand for U.S. dollar banknotes abroad. Determining exactly how much currency is held abroad is challenging, but research suggests that foreign investors hold roughly half of the dollar value of U.S. banknotes outstanding. This share is similar to or a bit higher than the 4 euro banknotes. Wait, hold on here. This share is similar to or a bit higher than for the euro notes. I get it. Okay. Which recent research estimates suggests that between 30 and 50% of euro banknotes are held abroad, primarily in countries that are geographically close to the euro area. Dollarization, or partial dollarization, is a global phenomenon that refers to the use of dollars in foreign countries as a substitute for the domestic currency. And so this is a lot of like where we hear about the de-dollarization beginning to take place, where people are actually getting out of the dollar and don't want to use the dollar. That would be like the de-dollarization. Dollarization is countries that actually use it. Like, you find Argentina, right? For example, you can go there and the dollar is more demanded than any other currency out there, including their own. And you can find other nations that also do this as well. These nations have a much more stable currency and can actually find that, if when they're using the dollar, that they could find when the dollar grows stronger, they run into deflationary scenarios in which that their dollar begins to start buying a whole lot more stuff within their communities and their economy. Sorry guys, I got kind of maybe I was just talking too much today, but my throat's kind of scratchy now. All right. Typically, the practice occurs because of persistent high domestic inflation. That's right. It's because their own foreign currency sucks. They want to use something that's stable, and that's when they come up with the dollar. While foreign citizens are free to use any other currency issued around the world, the dollar is the overwhelming choice for citizens in these countries. Fulfilling foreign demand for U.S. currency allows us to earn seigniorage. Did I say that? Seigniorage on banknotes held abroad. So, by store of value measures, the dollar remains the most widely used currency though its dominance may have edged down slightly over the past couple of decades. The dollar's attractiveness to private investors and businesses is especially apparent in its role as a medium of exchange. That is, in its use in trade invoicing, global banking, international debt issuance, and foreign exchange transactions. To start with, trade invoicing. The dollar is by far the dominant currency. Trade invoicing in dollars means that the terms of the contract are specified in units of dollar, and the dollar is the settlement object for the trade. Now, that's right there. That is the reason why the dollar ended up taking over as the world reserve currency when it came to gold and the exchange of gold to dollars. Because the dollar was facilitating the ability to do the transactions. That's how the dollar was able to dominate, right? And if it wasn't being used for that, nobody would even care to use the dollar, right? But here it was like, you got to think this is prior to even like, you kind of have to keep going back in history and you keep explaining all this stuff. But ultimately, if you think about like when they severed from the gold standard, we were in a position in which that we had acquired all the gold, right? Now, we were able to get all the gold essentially because people were using dollars. They didn't ask for the gold, they asked for dollars because the dollars were essentially as good as gold, or at least everybody believed that they were. If you had a certain amount of dollars, you were able to use those certain amount of dollars to get a fixed amount of gold. And this was believed by everybody around the world. And so if you held dollars, you essentially held gold. And now people wanted the dollars instead of gold because gold was limited on what it could do for doing the transactions. Dollars were very, like, made it very easy, made it very efficient to try and do these global transactions with. And so as gold was cumbersome, the dollar was efficient. They said, well, hell, let's just use the dollar. It's exchangeable for gold. It's a fixed rate. We trust it, whatever. And that's what they did. And then when they finally got to a point where there was too many dollars printed and people started asking for the gold back, they said, no, we can't do that. We're going to have to sever the gold standard because we've issued out way too many dollars. But you think about it, that's what the dollar was doing. It was facilitating the trades. It's the only reason why anybody ever wanted it. It was just like, man, it makes it so easy, so efficient to do this transaction. Like, why wouldn't we use the dollars, right? So let me read that again. To start with trading invoices, the dollar is by far the dominant currency. Trading invoices or trade invoicing in dollars means that the terms of the contract are specified in units of dollar, and the dollar is the settlement object for the trade. Dollar invoicing accounts for at least 3/4 of exporting invoices in all regions except in Europe, and over 90%, 6% in the Americas. Not surprisingly, the euro is dominant invoicing currency in Europe, but even there, the euro's share is only 50%, and once intra-euro area trade is excluded. Dollar dominance on this dimension has major benefits for the U.S. firms as it removes exchange rate risk and eliminates the need for complicated and costly hedging strategies when they engage in international trade. Invoicing dominance is linked to similar dominant roles in international banking and debt issuance. About 60% of international banking loans and deposits are denominated in U.S. dollars. For international debt securities, about 70% of the bonds issued in currency other than the issuing home country currencies are denominated in U.S. dollars. Now, that's another important one to really remember, right? This doesn't have anything to do with the United States at this point, right? Let me read this one again about how much demand for dollars is going to be out there. Think about this one for just a second. For international debt securities, okay, that means debt that is issued outside of the United States, not like anything to do with the United States. I mean, like a foreign country, nation, corporation, people outside of the United States don't have nothing to do with the United States. Not our banks, not our people, not our citizens, not our government, not our nothing, right? Nothing to do with the United States. For international debt securities, about 70% of bonds issued in a currency other than the issuer's home country's currency, right? So, for example, Turkey is going to issue out a bond that is due in a foreign currency that is not their currency. Like, they have a domestic currency and then they're issuing this in a foreign currency. It's going to generally be done in dollars. 70% of those that are issued is done in dollars, right? 70% of bonds issued in a currency other than the issuer's home country currencies are denominated in US dollars. That is huge. That right there should tell you that the demand for dollars going into the future is going to be persistent because of how many nations are issuing dollar denominated debts. Just go and Google it. Like, Google any of the BRICS nations besides maybe Russia and type in like anything like China dollar denominated debt. You're going to find that all these nations, all of them, are issuing out dollar denominated debts. And it's 70% of bonds that are issued in a currency outside of their own domestic is done in dollars. So, not saying that 30% of them aren't done in euros or some other nation's currency, 70% are done in dollars. These shares have been quite stable over the past 10 to 15 years. Dollar dominance in international banking has benefits for U.S. households and businesses since it means that foreign banks have a strong connection to the U.S. financial system, increasing the amount of credit available in the U.S. You hear that? This is what increases the amount available in the U.S., how much credit is available. We're living on a foreign credit card from somebody else's loans, right? Says it right there. This is like strong connections to the U.S. financial system, increasing the amount of credit available in the U.S. and lowering the cost of borrowing. For debt securities, dollar dominance means that when U.S. firms issue debt in markets outside of the United States, they can issue in dollars and don't have to bear the exchange rate risk. And U.S. investors can get exposure to foreign firms without increasing exchange rate risk. So all these nations, these foreign firms, all these people who issue out this dollar-denominated debt, U.S. investors can go and purchase into that stuff and not have to risk the exchange rate, right? The difference between the values of the currencies changing over time. It's already done in dollars. Everything is done in dollars. Like they're investing in dollars, they get paid in dollars, the interest rate's in dollars, everything's in dollars. And it's a foreign country or foreign entity. All right. The many sources of demand for U.S. dollars show, jeez. All right, Simon speaking. Okay, let's try this again. The many sources of demand for U.S. dollars shows through to its very high share of foreign exchange transactions, where, according to the latest statistics from the Bank of International Settlements, the dollar remains by far the most commonly traded currency. The size and depth of the dollar foreign exchange markets mean the dollar is frequently used as a vehicle currency. Even when firms, these people that have their dogs all around me. All right. Even when firms and investors around the globe want to transaction two currencies that don't include the dollar, they typically find that it is easier and less expensive to first conduct a trade between the international currencies and the dollar and then conduct a second trade to exchange the dollars for the second currency. See that it's easier to get into dollars first. And that's the way it is for just about anything out there. It's just like that's one of the reasons why you're not going to find a whole lot, and I think that explains it right there. A little complicated, but I think that explains why it is like when the BRICS nations want to start doing transactions in their own sovereign currencies, this is where it begins to get a problem, right? Is that not all nations want their currency. And for example, the one that we keep bringing up is when Russia was buying or selling all this oil to India in rupees and ended up with a bunch of rupees that nobody else wanted. And Russia really needed to figure out a place to go with all these rupees. They could sell those rupees out on the market, but it's basically that would cause the rupee to lose value. And it's like setting their own money on fire if they were to go and try and sell it. They have to go and buy something from another nation, but no other nation wants rupees. So they have to go back to India and say, what do you have for sale? And if it's nothing that they have, then you have to invest with them or something. And what if Russia doesn't want to deal with India with their money? They want to deal with somebody else. They can't. They just have rupees instead. So I think that's kind of that is what they were explaining here. Let me see. Let me just read it again. Here we go. Even when firms and investors around the globe want to transact in two currencies that don't include the dollar, they typically find that it is easier and less expensive to first conduct a trade between the initial currency and the dollar, and then conduct a second trade to exchange the dollars for the second currency. So, literally, like hopscotching into the dollar and then back into that other currency instead of going from one currency to the other. It's just easier and cheaper just to get the dollars, like basically sell your currency, get the dollars, and then buy the other currency, because that's the easiest way, because nobody wants to buy their, nobody wants the other currency, essentially, right? And this is typical. This is one of the reasons why, when they said they want to start doing deals in their own in their own sovereign currencies, it's like, yeah, good luck with that. It ain't gonna work. Yeah, I mean, it'll work for a little while, but then you're gonna start running into issues, and that's what they're describing there. All right, so the final role, how long are we into this? Half an hour. Okay, I didn't really want to take this too long, so hopefully we'll keep it under an hour here. The final role for an international currency is as a unit of account, and an important measure on this dimension is its use as an anchor currency, against which other countries may attempt to limit their exchange rate movements. Here, the research finds that the dollar's usage as an anchor currency has increased somewhat over the past 2 decades. Not including the US, economies anchored to the dollars accounted for roughly 50% of the world gross domestic product by 2015. By contrast, the share of world GDP anchored to euro was only 5%, not counting the euro area itself. So, yeah, definitely a lot more dominance in that as far as their role as an international currency, as an anchoring. I've never really heard it as an anchoring currency before, against which other currencies may attempt to limit their exchange rate movements. Here, the research finds that dollars usage as an anchor currency has increased somewhat over the past 2 decades, not including the U.S. Economies anchored to the dollar accounted for roughly 50% of the world gross domestic product. I'm gonna have to look into that. That would be an interesting video on its own. All right, to recap, by standard measures of an international currency's use, there has not been any notable erosion in the dollar's dominance over the past couple of decades. Going forward, however, there are potential challenges to the dollar's international status, and some recent developments have potential to boost the international use of other currencies. A shifting payment landscape. For example, the rapid growth of digital currencies could reduce reliance on the US dollar. People often conjecture that People often conjecture that cryptocurrencies like Bitcoin may replace the US dollar as the world reserve currency. But most trading in decentralized finance involves trades using stable coins, which link their value one for one to the US dollar. About 99% of stablecoin market capitalization is linked to the US dollar, meaning that crypto assets are de facto traded in US dollars. Ha! How many times did I say this? This is the first time I've read this, guys. This is brand new today. This is the first time I've really read this. I mean, I perused a little bit of it, but I didn't read this part yet. How many times have I said this? This is what their plan is. I know it. I know that now I know, right? They can't say it this many times and not have it be the case. Stable coins are what they're going to be used. Like, I'm not so positive about central bank digital currencies, but I am positive about stable coins now. Right? Think about that. About 99% of stablecoin market capitalization is linked to the US dollar, meaning that crypto assets are de facto traded in US dollars. So it is likely that any expansion of trading in the DeFi world will simply strengthen the dominant role of the dollar. Yes, it will. Right? And that's what, that's what's really crazy about it, is that, like you say, what did he say about the DeFi? The decentralized financing, right? The US dollar as the world reserve currency. Okay, but most trading in decentralized finance involves trades using stable coins, which link their value one to one one for one to the US dollar. About 99% of stablecoin market capitalization is linked to the US dollar. So any monetary policy, excuse me, any monetary policy that is conducted from the Federal Reserve to the dollar itself is then transferred through these stablecoins into the decentralized finance, right? I mean, it may not mean that they have control over it, right? Because it's decentralized, but the monetary policies that they conduct will transfer through stable coins. And if stable coins are being used, right? This is why they're so adamant about regulating stable coins. They're like setting up their own central bank digital currency does not seem to be at their, like, I mean, they talk about it. They like, the Fed now and stuff like that, but they are much more focused in on stable coins and regulating those, because I feel that's what they're going to end up transferring their monetary policy through into the digital world, is through stable coins. All right. The second potential challenge to the dollar could, oops, but I like that last sentence, right? So it is likely that any expansion of trading in the DeFi world will simply strengthen the dominant role in the dollar. All right. A second potential challenge to the dollar could be increased prominence of the euro, the second most widely used international currency. Like the US, the European Union is a large economy with fairly deep financial markets, generally free trade, and robust and stable institutions. Wider use of euro as a reserve currency may have been held back by the lack of a deep and liquid market for the EU debt. Though there have been some notable recent developments, during the COVID-19 crisis, the EU issued an unprecedented amount of jointly backed debt, reaching about 400 billion euros by May of 2023. While this is noteworthy development for the EU, this amount is tiny compared with the 24 trillion outstanding in the US Treasury securities. See what's interesting here? See, like, they're talking about the euros not nearly as used because there's not as much euro denominated debt issued. Let me read this again. A second potential challenge to the dollar could be increased prominence of the euro, the second most widely used international currency. Like the US, the European Union is a large economy with fairly deep financial markets, generally free trade, and a robust and stable institutions. Wider use of the euro as a reserve currency may be held back by the lack of deep and liquid market for EU debt. You hear that? So you need a lot of it, meaning that they need to issue a lot of this debt. Right, just like the U.S. Treasury's debt, there's a lot of it out there, and so it holds a dominant role. There's not a lot or as much EU debt, right? And in order for it to be liquid and deep, there needs to be a lot of it, and a lot of people transacting in it. So it says the lack of a deep and liquid market for EU debt, though there have been some notable recent developments during the COVID-19 crisis, the EU issued an unprecedented amount of jointly backed debt, reaching about 400 billion in May, right? So they issued out all this debt. There's some development like, hey, there's a lot more of this debt out there for people to do the transactions with, to use it as a reserve, right? In the May, while this is a noteworthy development, like this is like they're saying all this debt issuance is a good thing for being used as a reserve. But this amount is tiny compared to the 24 trillion outstanding in U.S. Treasury securities, because the dollar is by far the most dominant currency out there, and there's a lot of demand for that U.S. Treasuries in order to do these transactions with. You see how this works? Like understanding this is so important to understand what's going on here in our own domestic economy. You have to understand the dollar's role as a foreign reserve world trade currency. It's so important out there that most people here in America have no clue about. Like, we don't think about it in this fashion. We know that that it's king dollar and it's dominant, but we don't know to what extent, right? And this is serious about, like, it's a serious amount of debt to try and understand how much demand there is for it, and like literally the EU showed some relief to the amount of dominance to the that the world is seeking from the US treasuries, but it was tiny. They're saying it's tiny in compared to the 24 trillion. See? Nobody else compares. Nobody else is willing to issue out as much debt as the United States is, to go into this much debt, right? To be able to provide the world with the securities to do this with, right? This is like, this blows some people's minds. When they first hear this stuff, they're like, whoa, man, I've never heard of anything like this before. Right? But this is like, if you've been following Jeff Snyder or Brent Johnson, this is old news. All right. The continued rapid growth of China and Chinese efforts to boost their use of their currency could make the Chinese renminbi a more attractive competitor to the dollar and increase its international use. Several factors currently weigh against the renminbi as an attractive asset for international investors. It is not freely exchangeable, the Chinese capital account is not open, and investors' confidence in Chinese institutions is relatively low, right? Like, who trusts China? Nobody. All right. Recent endeavors by China to overcome these shortcomings include increased efforts to promote the renminbi invoicing. For example, it reached an agreement with Brazil to allow Chinese and Brazilian companies to settle trade in their domestic currencies, and has been in discussion with Saudi Arabia to potentially price oil trade in renminbi. However, outstanding outside analysis generally view these arguments as symbolic, and at most laying the groundwork for potential future use of Chinese renminbi in a very isolated instances. Some commentators have also argued that sanctions imposed by the United States and its allies on Russia following the invasion of the Ukraine could make the dollar less attractive as a reserve currency for the United States' geopolitical adversaries. In practice, however, U.S. adversaries have few practical alternatives to the dollar, as other prominent reserve currencies, such as the euro, Japanese yen, and the British pound, are all issued by close U.S. allies who also participated in the sanctions on Russia. So basically, they're like, yeah, go ahead and use something else. There's really nothing else, right? There's really nothing else. And if you are, you're still going with allies of the United States anyways. So, more generally, some worry that the dollar's role could be threatened by a move toward a so-called geometric fragmentation in which trade and financial flows realign and become restricted within blocks of allied countries. So basically the formation of the BRICS, right? The formation of a bloc that excludes the U.S. or even explicitly seeks to counter the United States' role in the global economy could make some countries less likely to dominate international transactions in dollars. Less likely to denominate international trades in dollars. This scenario sounds alarming, but thus far, trends that appear consistent with fragmentation largely can be explained by specific policy actions. One example is the dramatic reallocation of U.S.-China trade in recent years, as firms in each country decrease reliance on imports sourced from the other. While this shift has coincided with a period of heightened geopolitical tension, the evidence suggests a simpler explanation. Firms responding to the changes in relative prices, in this case caused by the imposition of reciprocal tariffs by the two countries since 2018. For example, while the U.S. imports of tariffs affected goods from China have plunged, imports of goods not subject to tariffs have continued to rise. Despite the reallocation of trade flows across the countries, at the end of the day, those trade flows continue to be invoiced mainly in dollars. A final consideration regarding the international use of the dollar relates to the financial stability concerns. In times of global financial stress, investors of governments seek a safe haven to protect the value of their assets and stabilize their own financial markets. When this happens, there is almost always a flight to the dollar and heightened demand for U.S. dollar assets. We saw this in 2008 and again in 2020. This is the ultimate vindication that the US dollar is the world reserve currency and is likely to remain so. In times of global stress, the world runs to the dollar, not away from it. To conclude, for the reasons I have laid out here, I do not expect to see the US dollars lose its status as the world reserve currency anytime soon, nor even see a significant decline in its primacy in trade and finance. Recent developments that some have warned could threaten that status have, if anything, strengthened it, at least so far. And that's the end of the speech. Thank you very much for sitting through that. It took us 45 minutes to read that speech, talk a little bit about it. Now, let's go ahead and discuss some of the things that were in this speech and whether or not the dollar is really truly going to be failing as a world reserve currency because of all these BRICS nations getting together to do transactions outside of the dollar. Do they really have a chance? And if they do, how far away is that really going to take to be finally come to fruition that the dollar fails as a world reserve currency, considering the amount of dollar denominated debt that is issued not only by the BRICS nations, by all nations out there, and that all those debts are due in dollars, which means that they have to do something to acquire those dollars to pay those debts back. So anyway, what do you guys have to think about this? All right, we got 114 people watching right now with 56 likes. Let's see if we can get it up to 100 likes before the end of the hour in the video here. Simon is pumping out the videos today, and I like it a lot. All right, man. Thank you guys for. I'm not trying to saturate you with too much video content or something going on, but this stuff is important, and the more I get out and the more we hear about it and the more we understand it, then the easier it is to conduct ourselves as we go into the future. And so there's a lot of stuff coming out right now, at least from the Fed's speeches. There was quite a few of them. I think there was another one that came out earlier today talking about, I think, cryptocurrencies, if I remember right. So, and I'm going to go read that one. Hell, we might even do that one later. Simon, love your video. Wish I had found your channel sooner. Well, thank you, Oscar. I'm glad you're here. That's the thing. People have said that before to me. I was just like, man, I wish I had found it earlier. You weren't on the right path earlier, right? You weren't ready for it. You're ready for it now. That's why you stumbled across the videos today or yesterday or last week or whatever. The reason why you came across it is because now's the time for the information. You're ready to receive it. See, this isn't by accident. This is like the way it's meant to go down. As you are doing your research, trying to figure it out, listening to other bloggers and YouTubers and everybody else out there, finally, my video came across your feed and it started making sense because now was the time that you needed to hear it. You didn't need to hear it before. You need to hear it now. And that's the reason why you're here now. And it's funny to think of that as like, I'm not trying to be like some kind of crystal gripping, a whole universe coming together kind of thing, but that's really how it works. The information a lot of times will end up finding you if you're just open to receiving it. And so here you are, All right. Take your money to the bank, liquidity flow, etc. All right. Australia, UK, pound, euro, yen make up like 80% of the world economy. BRICS not even close, All right. What's up, Simon? Do you think bonds need to crash a little before the Treasury will step in and start buying with the Treasury funds? I don't know if they necessarily need to crash a little bit. I would assume that that's probably what is going to be the case, because really we're talking like liquidity issues, and like liquidity issue means that there's no buyers. Right? And if there's no buyers, then that means the liquidity is drying up. So yes, that would be a crash, but I don't think like necessarily it's going to reach like crashing level. I think it might be pushing like stress or concern or something of like that level. But as far as like crashing, I don't know if it would actually get into that. Not even like a little bit. In fact, it's probably going to have to be announced to people that there is even an issue going on within the bond market itself before anybody would even pay attention to it. So, if you're meaning like a crash a little, meaning like the stresses of it, yeah, then I think that would probably be the case, yes. But really, it's just like they just want to make sure that anytime anybody goes to sell a bond, that there's going to be a buyer, right? And that's the biggest concern, is that the market stays liquid. And just by being there and making the announcement is going to be enough to provide the liquidity that they need within that market, because the market participants will be very confident within the participation of the market, knowing that the treasury is going to be there as the world's credible threat. In fact, that's how we said it, right? That's how Josh Frost said it. I wrote it down here. Buybacks can help improve the liquidity of the treasury market by providing a regular opportunity for the market participants to sell back to treasury off the run securities across the yield curve. This should improve the willingness of investors and provide liquidity in the securities, all else equal, knowing there is a potential outlet. The outlet being the treasury itself, buying those bonds to sell some of those off the run security holdings. So yeah, I guess it would be like maybe a little bit, right? No, nah, dude, we've got 81 in here from chat's perspective. The biggest crypto influencer in the world is about to start podcast series titled "Teach Me How to Hex." The Hexagon community, right on. Um, I'm welcome to I'm welcome to block you, same as everyone else. Yeah. Okay. There you have it. Stop listening to the gold pumpers. Well, and that's just the thing. Like I I like the idea of people buying gold. I just don't like the idea of the reasonings that people are trying to sell it. They sell it off of this fear thing, and then like people misunderstand what's going on within the economy because they live in this fear-based idea because of somebody's sales tactic. It's not the right way of going about it. Like precious metals is by far the most important thing for an individual to have in their possession. I mean, I cannot think of anything else that is smarter to have. Like, I I own more in cryptocurrencies, but that's quite by accident. I didn't mean to, right? Like, I mean, I would much rather have more in silver than anything else I have, but I ended up with more in cryptocurrencies, or really, I ended up with more with equity in the house. But as far as like something that I could sell quickly, like I have more in crypto, but that was an accident. Having silver possession is by far the best insurance policy that you can have. It's outside of that third party claim. You don't have to worry about like a phone call or an app or a letter in the mail or some like worried about anybody else out there. It's all on you, and that is like probably one of the biggest ways of acquiring your freedom is to have something in your possession that is outside of a third party. Nothing else quite does it like precious metals. But yeah, you're right. The way that people sell it is just like they try to scare the hell out of you. Like the dollar is about ready to fail. Like there's no other way of selling silver. All right. And I think I do a great job of like, selling it. And I don't even sell it. Like, but just the idea of why you should buy it. I think my sales pitch for that reason is by far a more legitimate and trustworthy way of going about acquiring the metals and the belief and the meaning behind it than anything else out there. Right? I mean, everybody else is just like, dollar crash tomorrow, buy gold or else you'll die, And it's just like, man, that's no way to go about selling this stuff. Let me show you how to just done. Let me show you how it's really done, how to sell something like this. Being a salesman is like, because that's what I am, right? And you see the sales tactics out there. You can see it amongst the other people who are trying to push their agenda, push their gimmick, push their program, push whatever it is that they got going. And I see it. I recognize these tactics, and it's not a bad thing. I mean, I use a lot of them myself, right? But it's what they're selling. That's what gets me. It's just like we could both sell the same item, but the fear that a lot of them put behind it, this to push this anxiety to like get it, and me is just like, no, look at this logical reason for you to acquire this, and then you'll always be happy with that logical reason. If the outcome doesn't come the way you think it would, then you're kind of pissed that you bought this stuff, because that was the initial reason why I bought silver and gold, and then later on I shifted my ideas on why it is. Greetings from San Francisco. It ain't cheap to live here, but it's worth it. That's the way I feel about Astoria. Astoria is a very expensive place to live, and in fact, Astoria is very similar to San Francisco. Like a lot of the just kind of the feel of the town, being up on the steep hills and old houses and stuff like that. It has a very kind of San Francisco type of feel to it, but it's not nearly as expensive. But it's still expensive. Do you think the Fed could push us into economic crisis and then push the central bank digital currency as the solution? That would give them control of the currency. They already have control over the currency. I don't think that's the issue. Um, I don't think at this point, I really am not so convinced that they're going to issue out a central bank digital currency like a Fed coin, as much as I believe that they are going to regulate stable coins and let that do the work. Like they don't have to do anything. They can sit there and just regulate these stable coins, let other people do all the work, right? They set their monetary policy, which will transfer into those stable coins. I mean, you think about how efficient is that, right? See, I know like a lot of people think that they want like this ultra control and dominance over each and every single one of our lives until like we have absolutely no sense of freedom or independence or anything like that. Like I know a lot of people believe that. I've studied enough stuff to understand why it is that people believe that way. I totally get it. Like I'm not trying to knock that at all. What I'm trying to understand is that the Federal Reserve in the position that they are taking and stuff, it doesn't seem to go that way. All right. Now, I can see the potential for all that evil, crazy stuff that's going on. I'm looking for evidence of it. Right? And that's why I read these speeches, is that in the speeches, they are telling us straight up what it is that they are planning on doing. It's the reason why I'm able to make a lot of the calls and understandings of the monetary policy the way I am. It's not because I'm like some super genius or anything. I just read these things. That's it. That's the only difference, right? Is that I don't knock the information for fakery or lies, right? Sometimes I look at it and it's very questionable, right? But I'm not really looking at anything other than the monetary policy strategies. Like all the rest of the stuff, like Jerome Powell saying that he really wanted help from the supply side and that they really were expecting it, to me, that is a straight up lie. That was a straight up lie, because if the uneducated economists can say back then when they first said it that they must be either stoned or stupid, right, in order to make this sort of like call that they're looking for help from the supply side, when there's no way the supply side was going to help. That was the uneducated economists saying it that day, right? I know that they knew that too, right? And that was a total act to try and keep inflation elevated and giving it an excuse. Who knew? We thought we were going to get help from the supply side. Oh, bummer. Inflation ran hotter than we had expected. Bull. Absolute bull, right? And so it's stuff like that. It's hard to see, right? Like for me, that was easy to see just because I knew so much about the supply side as part of it, knowing that they weren't going to get help, and that knowing that they knew that they weren't going to get help either. Like, there's no way that they didn't. Those things are hard to identify. I mean, that is almost impossible to identify. That was only off of my own understanding of the supply chain and working retail as much as I have to understand that kind of call is absolute ignorancy, right? And again, like, it's not trying to be offensive or anything else towards it. It's just that those 150 economists that work at all those different Federal Reserve banks could not possibly have gotten together and thought and not had at least some sort of understanding of it like I did. Like, I can't imagine that I was smarter on the supply side of things than all those educated people. Like, I can't believe that. I will not believe that. I believe that they were telling a lie in the sense that they were going to get help from the supply side. That was a ploy to allow inflation to run extra hot, right? And then give it an excuse. We thought we were going to get help. Well, so weird. We didn't get any help. Like, come on, it's just like you guys wanted inflation to run extra hot, extra long for an extended period of time, and you had to have an excuse to allow that to happen, and that was the excuse. And everybody's just like, look, they made a mistake. See, they admit they made a mistake, and it was no mistake. The whole thing was a credible threat, And that's the only way, like, that's the only way I know it, is because if I can make that call, right? Like, there's no way that I am smarter than all those people to make that call and say that it isn't going to work, and that inflation is going to run extra hot, extra long because of that, and that they're not going to get that help from the supply side, right? I'm not that smart enough more than they are. You know, I mean, I know I ain't. All right, no volume. Can anyone else hear him? I can hear him, yeah. All right. Just had to refresh the video. Cool. All right. Simon is pumping out the videos today. It's like, okay. Oh, I've already read. Yeah, I kind of went back. Simon, love your videos. Okay, let's cruise down here a little ways. Hey, Brody, what's happening? Okay. Do you think 120? All right, 120 viewers. Let's get the likes to 120 in 1 minute. Let's go. Yeah, let's do it. We got 108 people watching right now with 82 likes. Let's at least get it to 100 in the next couple of minutes. Let's do that, right? We're at 1 hour, 12 seconds into it. At an hour and 2, we'll be at 100 likes. Do you think Janet Yellen's statements on no more financial crisis in the U.S. is really a possibility? It's something interesting to think about, right? Because, like, when I first heard that, I thought, you know, because I have a tendency to think about financial crisis and recessions as the same thing, but they're not. They're two separate things, right? And what she had said is that she believed that there will never be another financial crisis in our lifetime, right? And that's really interesting to think about, because what is a financial crisis? It's basically when loans dry up to the point that people have a very difficult time acquiring them. Now, a financial crisis is when it's like literally freezing up. Nobody can get anything going on anywhere. Banks won't loan to each other. They won't loan to people. They're like, everybody's just like all of a sudden just stopped, right? And so that would be a financial crisis. What I'm assuming is that Janet Yellen is believing that once we start moving into financial issues or concerns or possibilities of the crisis, that the efforts coming from the Federal Reserve and the Treasury in conjunction will do whatever it is that they can do in order to prevent that from happening, right? So now, they didn't necessarily have the tools in place, say even 10 years ago, in order to deal with a shock to the financial system like they had experienced, say, like from the Great Financial Crisis, right? After that, they had a lot of different tools in place to now prevent, or at least to combat, the possibilities of those financial crises like we had experienced before. Now, it's not just those other tools that have already been deployed, it's the possibility of new tools that we have not yet seen or heard of. And it seems to me, within their own statements, not only mainly coming from the Federal Reserve, but even with Janet Yellen's confidence in saying that, it seems to me that they must know about the financial crisis or the possibilities of these financial crises that could be coming, and having the tools already for the unusual and exigent circumstances or whatever to deploy into those things to prevent the actual financial crisis from occurring. So now, that's putting a lot of faith in the Federal Reserve, right? That's putting a lot of faith in the Treasury, putting a lot of faith in the possibilities of no financial crisis or something like that. That is a very dangerous thing to do, right? That is very dangerous to be in that position where you're like, they got it totally covered, no worries, I'm fine, I won't stress about it. That is not smart, right? The reason why I say these things and feel very confident and as far as being able to progress through life and stuff is because of that huge stack of silver. It's not huge, right? It's a small box of silver that I have in a stack of cryptocurrencies. Is that piece outside of the third party, right? And so when you have that in mind, it makes it less of a concern going into things like financial crisis, because you're not worried about your business so much. You're not worried about your savings. You're not worried about these other things, right? So understanding it in that fashion, yes, it could be very, very devastating. But it seems to me that they have this idea of what is coming and the tools sitting in the background waiting to be deployed. It just seems to be that's what's going on when I listen to their words. Now, I can't prove any of that because they don't deploy these things until there's an actual crisis, and then they say, hey, look what we got, right? So when I say it seems that way, that's the only thing you can say because they don't tell you what they are. They don't tell you, hey, if this crisis occurs, we have these things that we're going to use. Yeah. All right. Silver is the working man's metal. For 5,000 years, people paid in silver for a day's work. Yeah. What is your sales pitch on silver? You heard it. All right. Appreciate you big time, Simon. I learned so much from your work. Well, thank you, Brody. I really appreciate you being here. Reminder to other viewers that it really helps if you hit the like button. Yes, it does. We're at 97 likes. We're just 3 likes away from hitting that 100 mark. All right. They have to juice the markets to financial tax receipts, financial markets, the real economy. Not sure how that's going to go. They need to inflate debt away, run 6% inflation. Official inflation reported at 3%. That is what they are doing. I liked it. I feel richer already. uh, Incredibly valuable info. Thanks for all your help in keeping up the good work. Are you are you familiar with Martin Armstrong's predictive cycles modeling? I appreciate you're busy, but maybe worth your time. Martin Armstrong. Seems like I followed something of that nature. All right. But no, I'm not terribly familiar with that one. All right. Gold and silver are insurance against the falling currency. Currency lead allows you to keep your gold. Oh, lead allows you to keep your gold and silver. Is 3.9% a good rate for an auto loan these days? Well, I would assume so. 3.9 seems pretty low considering. Right on, guys. This was a lot of fun. We are an hour into this. We got that 103 likes. You guys are so cool, so awesome. Thank you for sitting here this through this Federal Reserve speech talking about the dollar and its international role. Now we have a little bit of better understanding of how much the Federal Reserve is looking into it and sees the role that the dollar is playing as that international currency. How much dollar denominated debt really exists out there? See, I think that would probably be the biggest concern coming from the Federal Reserve, is that when all this debt becomes due, like if it doesn't get rolled over into new debts, then those debts have to be paid. That's going to be a huge, huge demand for dollars to pay those things off. And it makes me wonder if the Federal Reserve could even print at a pace that is fast enough to cover all those debts. I mean, it's a lot of them that we're talking about. So. Anyway, is commercial real estate housing units in the safe? Is now a good time to set up a balloon? I don't know. Commercial real estate, I wouldn't touch that stuff for a little while. I don't know. It's like, I imagine there's probably going to be some buying opportunities with blood in the streets when it comes to commercial real estate. But dang, man, what a falling knife to try and catch there. Alrighty, guys, this has been a lot of fun. Thank you so much for being here. 101 people watching, 106 likes. And if you are wanting to know about the other speech we are going to be covering later tonight, that's going to be in a members only live stream. And that speech is talking about the possible liquidity risks that are coming. Well, I wouldn't say it's all about liquidity risk. It covers some of the concerns with liquidity coming into the future, and I thought that would be a fun speech to do. But that is for members only. That's a members only live stream. If you want to join in on that, there's a link down in the description. It's $1 to join the channel for a month. You get access to all the member only videos and access to those member only live streams that we do. They're very informative live streams. These smaller groups, we've had about 30 people or so in those live streams, and they are incredibly informative. The content is not only like, very serious, and we break it all down in a very serious fashion to make sure that everybody understands, but then also the viewers themselves in the comments, they are incredibly informative and very, like, the opinions and ideas and stuff that are coming are just like phenomenal for trying to understand what is going on out there. It's one of the better parts of this channel that I think I have seen in quite some time is these member only live streams. We're up to a little over 400 members, and it's still growing every day. So consider joining the channel. $1 a month. It's $1 to you, but it's everything to me. I put a lot of work into putting these things together, and I would say that not only is my knowledge base increased quite a bit just from the idea of doing these member only live streams, but I know I'm getting a lot of people who are getting the value out of it too, saying, man, this is incredibly helpful, very valuable information, and stuff that you just don't really get from anywhere else. And if you don't take this information in, it's like it's hard to understand, right? It's not easy to work this thing into your life so that you know what it is that you need to do with this information. Once you break this stuff down, you internalize it, you just intuitively just start using it within your own lives. You don't even have to think about what it is that you need to do with the information. You're just automatically doing it. So, all right, guys, thank you very much for being here. Uneducated Economist, you let me know.